sort of the flimsiness of the economy, up 1.1%. But maybe this is Paul Ryan's way of saying, hey, President Obama, we're going to put them at the front of the queue. Although I'm not sure the American public wants to hear anything about NAFTA right now.
Well, I mean, I think the bottom line is that the big challenge that Britain faces right now is their trade agreements. If they are put at the front of the line, it shows we're supporting that initiative. And if we support that initiative, I think it's going to make a statement that we're moving in the right direction.
Back in the backdrop here is Russia saber rattling via the Ukraine, via nat gas supplies, threatening to maybe cut off nat gas supplies into Europe. It behooves Europe to step in and say, you know what, we need to get oil trade and nat gas trades up and running, because watch out for Putin in the back doorstep.
You know, Todd, though, it does put us in an interesting position, because if we do this, it certainly would help to encourage other nations in the EU to break off, knowing, hey, as soon as we break this off, America will come and perhaps, you know, cut quick and special deals with us. I mean, it's an interesting dynamic there.
Listen, I think there's a lot more of that coming anyways, Charles. I think the overall view, again, the manipulation, the financial engineering that's been done by Draghi, by Yellen, by Bernanke, by all the central bankers around the world, I think the nations are getting tired of it, and we're seeing that we've got $4 trillion, yet we got a 1% growth. How are we going to ever get out of this until we see an actual financial revolt? And I think that's what we're going to see here, and I think there'll be a lot more that are going to want to pull out. Britain was an easy one because they kept their currency the entire 20 years anyway, so they didn't have much of a problem.
Yeah, although I got to tell you something. They may be mad at the ECB, but they all want their own central bank. So if you guys think it's tough dealing with 2 or 3 of them, what about 27 of them? Hey, let's talk about the economy more, because that GDP report was out this morning, revised a little bit higher, 1.1%. Ed Butowski, you talked about the economic underpinnings of this market. What do you make of this?
Well, it's horrendous. I mean, we need our economy growing. You know, make no mistake about it. In order to get enough tax revenue into the country, we need our economy growing somewhere 4 to 5% consistently, quarter over quarter, and we're nowhere close to that. You know, and the margin of error on that 1.1%, Charles, you know, it could be 0 or it could be 2%. That's still not good enough. We need this number to be a lot higher.
Now.
Go ahead, Nicole.
The other thing that's very important to note is now people are throwing around the word recession. We haven't heard that in some time, and that's been a theme that we've been hearing. Bill Crows, who has outperformed his peers by more than 75%, came out over the last 24 hours. He was on with Liz Clayman yesterday as well, noting that we have a 30 to 50% chance of a recession, a trickle down from the British exit story, and that bond yields for the 10-year bond could drop as low as 1.25%. And we're already at near record lows. So this is something that is worrying Wall Street as well. But they're trying to buy him and play the market and the like, but it's something that's lingering.
You know, just to addenda to what Nicole is saying, you see in the headlines, improved GDP rate, right? Wow, it was 0.8% was the initial, and now it's 1.1. I mean, now Europe and the United States are in a scorching horse race to see who's going to grow more slowly.
Right. You know, guys, it's interesting, though. Hold on one second. That I don't know that we do so much trade with the UK that it would push us into a recession. I don't think that's going to happen. But, you know, of course, when you're only going to 1%, you're on a razor's edge to begin with. Go ahead, Ed.
Yeah, I mean, that was basically a very similar to what I was going to say, is we're now dumping everything onto Brexit, you know, for our own problems and our own issues. You know, it's amazing to me how much people now are going to use that as a crutch for our own, you know, basically our own horrible economy. You know, I look at Brexit as very similar, Charles, to what happened with Bear Stearns, and then months later Lehman Brothers and Morgan and Goldman went. I'm telling you, we're going to see a lot of other countries, as Jeff said earlier, that are going to start to fall in line and start to break away as well. So it's very similar to 2007 when Bear Stearns went out of business. We're going to see the same thing happen months from now with these other countries.
Although, okay, you know, we've talked about the economy, we've talked about the Fed. Let's talk about the economic implications of further disintegration of the EU. Jeff, you know, we're talking about countries breaking off. We're not talking about countries declaring war on each other. We're talking about more sovereignty, more independence. Why would that upset the financial markets to the degree that Brexit has in the last 2 days?
Well, I'll tell you why. Because what the EU created is this interdependence with financial institutions. If you look at what's going on with Italy, if you look at how many bad loans there are out there, unfortunately.
But couldn't you argue, though, that they made these kind of bad loans because of the EU, because they knew someone else was going to buy it and pay for it?
Here's the issue. The real crisis is how we govern ourselves. The only thing that's standing in the way of growth are the bureaucrats themselves who could botch up these trade deals.
This is why I think ultimately the disintegration of the EU could be a blessing for the continent.
It is, but the one thing that they were, back in 2012, they were trying to negotiate a bank bailout plan. Right now, they currently don't have it. These countries that are going to step up for referendum, they're going to step up for referendum leveraging off of the fact that they're going to walk away from debt. And that's a very dangerous place. I agree 100%. This is a victory. The more sovereignty we have, the better off we're going to be.
Although I'm not sure anyone's going to walk away from debt. And I think Todd made the best point. EU made a smart decision. I think it was John Majors. With that opt-out clause, never joining the euro, it's a lot harder for countries tied to the euro, in my mind, to make the similar move. All right, we want to talk about some of the big names.